Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with the market recap for today, 21st of October. So, look at this. Look at this momentum to the upside. Look at this bullish Friday. I mean, wow. I was not expecting this, but come on. This is what happens in third week expiration days. So basically, let's go back a little bit to the options. So today we had almost 5 million open interest amount for options. We had a big put wall in 370 in SPI, 370, 375. Max Pain was 371. So basically, market, in order to not pay a lot of these puts and perform max pain for all these options, 5 million open interest amount of options, they needed to push market to 371. I think it was 375 this morning, something like that. And that's what they did. They basically pushed the market to the upside in an unbelievable way. Manipulation, volatility. This is insane. Some of you maybe are referring to this news headline in which Fed is more or less to slow rate hikes. Honestly, I don't think this is happening. Why? We were pointing the last 2 days that rate hikes, yields are in an unbelievable high. If we checked in this case, April's 2023 yields, they were at 5.01% this morning. Of course, they pulled back, but I think this doesn't change anything. We are going to reach almost 5% next year. Not only in April, if we check September 2023, we are almost also at 4.8 and December 4.6. So, okay, yields pull back quite a lot. 2.5%, almost 3%, 3%, 10-year pullback 0.3%, and 2-year pullback 2.8. So yields are pulling back, but I think it's not fair to say something like this, that Fed is too slow, rate hikes, blah, 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 blah. So let's check FedWatch tool in which analysts provide an estimation for the FOMC meeting and interest rate hikes in 11 days from now. 96% of them say 75%, 75 basic points, that it's 0.75, the same as we are performing the last FOMC meetings and interest rate hikes decision. So I think this headline was meant to justify, to provide a catalyst for this insane move that we had in the Nasdaq. I mean, that's fair. They can do that. They can manipulate also the media to provide a catalyst or a reason for retails to follow their movement, because this is basically insane. In my opinion, there was no justification for this kind of move that puts an insane big bullish engulfing candle in the last day of the week, in which we had 5 million open interest amount of options expiration. I think this is all staged by Wall Street, by hedge funds, by market makers, by everyone in Wall Street to put some kind of a fake push. That's my opinion. So, saying that, we had a lot of opportunities today. I was long at the beginning, I was short in this pullback, I was long again for the retest of this high of day in 11,200. And then I saw this choppy action Friday. I was saying in the update that this blue dot line last week high 11,253 was about to break, and this is what we have. This EMA was certainly acting as support, super bullish, holding the 200 EMA in the 1 minute, 200 moving average. So if we change to the 30 minute, we basically push and reach the top of the channel that we have been trapped all this week. So Monday, we push, we marked the high of the week in 11,431. And in the last day of the week, in which a lot of expiration, a lot of options were to expire, they push the market from low of the week to high of the week. Come on, guys. Let's be honest. This was a very good push, but I don't think this is justified. So be careful. This can be a bull trap staged by Wall Street based on options. That is what is moving the market every time. But be careful. I think nothing has changed in terms of fundamentals. Nothing has changed in terms of crazy amount of yields and interest rate hikes that are going to be happening until the end of the year. So be careful. Don't buy everything you see in the headlines. That's my opinion. We had a very nice move to the upside, and that's all. I think this is far from real and far from linked with the actual reality of the market, of the economy, sorry. So that's my opinion. VIX was pulling back more. It's in the middle of nowhere land. Obviously, if we change to see the treasury bonds, if you see this and you are used to see bonds markets, this is not bullish. This is holding. Treasury bonds, TLT, is not as bullish as the market is trying to show. High yield corporate bonds, okay, 0.96 in the green, but the big picture is we are not bullish. Dollar, if we see the dollar, we more or less rejected previous levels. We tried 114 for the last time, maybe. And we pull back again to the base of this sideways consolidation around 112. And look at these wicks. They are still holding. So I was expecting with this kind of push to see a very weak dollar below, maybe crazy below 111. Yields are 4, maybe 4.2, low 4s for next year. That would be quite bullish. Treasury bonds pushing again, bouncing off lows, crazy move. That would be bullish to me in the overall picture. But for now, I don't think this is justified. This is just staged by Wall Street to create FOMO and to justify retail traders that were playing options to go home on the weekend with nothing. XLU utilities, some kind of bounce, but still we cannot say anything with this chart yet. It's not doing something like this. Not that, but something like this, super bullish. It's not doing this. XLY, XLP, the same. This ratio between consumer discretionary versus staples is not breaking this way. We are still in nowhere land. Fundamentally, in my eyes, we have not changed anything. It's just a Friday manipulated price action for Wall Street to gain billions. And that's all for me. Thank you everyone for your time. Friday night. Enjoy your weekend. I hope you had a nice trading day. If you have any questions, you can comment down below. As always, if you found this video useful, please click the like button and subscribe to the channel to receive notifications when I upload new videos. Remember, I upload new videos every single day for market forecast, market updates, and market recap. This is a lot of information for you to gather, to review, and to play your opportunities. I appreciate your time. I hope you had an amazing trading day, an amazing trading week. Rest, enjoy your weekend, and see you on Monday with the market forecast. Remember, discipline and risk management are key for success. Stay safe, everyone.